Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the SALT Conference in New York City. Joining us for the segment, we have Tsai. She's founding partner and CEO of 500 Global to discuss when everyone else is pausing, this could be one of the best times to invest in promising and innovative startups. Christine, it's great to have you with us. Welcome to Trade Talks.
Thanks so much for having me.
This is one of my favorite topics where it feels like everything's on pause, everyone's kind of dialing back with capital, but there is an opportunity to find some great companies. Let's talk about identifying burgeoning tech and talent to create value in spite of the macroeconomic environment.
500 Global has been investing both in the US, Silicon Valley, as well as markets around the world since the very beginning of the formation of the firm, so 2010. So for the past 13 years, we have been investing in founders from all corners of the world, and 500 was founded just a couple years after the 2008 financial crisis. And of course, in the past decade, as we know, we've seen kind of various cycles within the market. And what we have found is, regardless of kind of origin of the company sector, there certainly are big opportunities in a lot of these regions around the world for a lot of the reasons that we see big populations, potential for GDP growth, and technology fundamentally is just so much more expansive, interconnected than it was in 2010. And in terms of the founders themselves, we also find that in terms of just certain characteristics or criteria, we find some consistency, and it's really independent of pedigree, in some ways independent of where they're from. So I think that's the big opportunity.
It's interesting, we're in uncertain economic periods, but that also coincides with major technological shifts, and it creates some of the most successful tech companies around the world. We saw it in the early 2000s, we saw it out of the financial crisis, we're in the middle of witnessing it now. What are your thoughts about that?
Definitely agree. It's times of crises and upheaval that great companies are born. We saw this with 500 at the very beginning of the firm. We invested in companies that were started just around or shortly after the 2008 crisis. And so we definitely see this in our own track record. And I think if you look back even to the dot-com boom and bust and the companies that came out of that, as well as even out of the 2008 crisis, you saw big technology platform shifts. That is definitely what is happening today, especially when you look at companies building with AI, generative AI. I think it's going to be a lot of great companies coming out of this vintage of 2023 and next year.
Why is now a great time to expand investments outside of the United States and take a more global approach?
Well, if you think about where the world has been over the past decade, again, with 500, we've been investing in these markets since the very beginning. It's a very different place in terms of technology, how interconnected we are. Unfortunately, we saw this very much with the pandemic over the last couple of years, but I think as you look at markets around the world, there is a big push, certainly from even those governments or administrations, to see technology and entrepreneurship as a fuel for economic growth, for job creation. And because of that, resources are much more accessible. The costs to start a company are much cheaper than it was back in 2008, 2010. So if you really take a look at where there are opportunities for investors, both in terms of deal flow, great companies coming from everywhere, whether it's in the US, Latin America, Southeast Asia, all markets that we're active in. And even from the more economic perspective, certainly valuations can be a bit more favorable in some of these markets. So I do think that while you really need to understand these markets to be able to find the deal flow, it certainly is there even more than ever before.
Why can investors benefit from later stage investing, even in an environment that feels a bit daunting right now?
Again, I think with the current economic environment, with the macros, it certainly is not a lot of optimism in the market, but I think if you look at the past few years and where we're coming from, venture has been kind of on a historic bull market. The last couple of years have been really outliers in terms of venture funding, IPOs, valuations. And now, the market having corrected in terms of valuations, it actually potentially is a great time to invest even at the later stages where valuations have calmed down. Companies are really focusing on profitable, unit economics versus growth at all costs. So there certainly are opportunities.
You had mentioned at the top that there are very specific characteristics that founders have, and it's not necessarily pedigree or your network, if you will. What were some of those characteristics that you've identified?
So in terms of characteristics of founders, of course it doesn't guarantee success of the companies, but what we have found is founders who really prioritize speed of execution, show humility in terms of being coachable and having empathy for their team and their customers. And then finally, really prioritizing what is that trust that they can build, again, with their customers, with their team. These are 3 examples of qualities that really help founders be better positioned, even from the very beginning, all the way till they scale the company. If you think about just how difficult it is to start an early stage company, the vast majority of companies fail. That is the model for early stage venture. So again, companies that prioritize, they can make decisions quickly, they can execute, they can fall down, get back up. They are not focused so much on tunnel vision. They understand their market, they understand their customers, they take that feedback in. And again, the trust factor, especially when you think about the customer perspective, building that trust with your users and your customers is critical, certainly with your capital partners, stakeholders. So the more founders do those 3 things, puts them in a better position.
Which is what makes this valuation reset almost a silver lining. There is a lot to learn, especially from younger management teams. From what we've seen, it's been a dramatic shift from 2021 to where we are right now. It's a great opportunity for younger founders.
Yes, it definitely is. I think a lot of the things that have helped fuel the growth of venture and tech in Silicon Valley, I think there has been quite a bit of a reckoning in terms of the trust building with your stakeholders. Governance is an issue, so I think there is starting to be a bit more of that balance, which is ultimately much more sustainable.
All right, Christine, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.